Atrium Ljungberg's Q2 report is not a clean beat, but it is better than the headline numbers suggest. Going into the report, the market was not asking for perfection. The stock was already depressed. The real question was simpler. Could Atrium show that leasing momentum was stabilizing, that comparable income was no longer deteriorating, and that the balance sheet was still under control? On that test, the report cleared the bar. The most important number was net letting. After negative net letting in Q1, Atrium delivered positive net letting of 15 million kroner in Q2. For the first half, net letting was also positive, at 7 million. That matters because this was the cleanest operating signal in the report. It tells investors that tenant demand has not disappeared and that the company is still able to defend its locations in a difficult property market. The second important signal was comparable performance. Headline rental income grew 6.2% in the quarter, but the more important detail was that comparable rental income was flat and comparable operating surplus was almost stable, down just 0.2%. That is not a recovery, but it is stabilization. And for a stock trading at a large discount to NAV after weak Q1 trends, stabilization can be enough to change the tone. But this was not a clean bullish report. The first half is still soft. Income from property management was down 1.2% for the period. Comparable rental income was still negative. Comparable operating surplus was still negative. So the report does not prove that the company is accelerating. It proves that the worst leasing fear did not show up in Q2. The balance sheet is also acceptable, but tight. Loan to value ended at 43.8%. That is still below the company's 45% ceiling, but it does not leave much room. For a company with a large development pipeline, that matters. Atrium can continue investing, but investors will keep watching whether leverage starts to constrain the pace. Property values were another drag. Unrealized property value changes were negative 79 million kroner in Q2 and negative 295 million for the first half. That keeps pressure on AV, and it explains why the market is not likely to treat this as a full re-rating event yet. Then there is Ericsson. Strategically, the Ericsson lease in Hagastaden is important. It validates the long-term development story. It supports the idea that high-quality urban locations can still attract major tenants, but financially, it is still far away. The lease will not be included in net letting until conditions are met and occupancy is expected between 2031 and 2033. So for now, Ericsson strengthens the story. It does not yet strengthen the income statement. That is why the right conclusion is mixed, but better than feared. The weak headline layer is still there. NAV pressure, property write-downs, soft first-half comparable numbers, and limited balance sheet headroom. But underneath that, the operating signal improved. Positive net letting, stable comparable rental income, almost stable comparable NOI, and slightly higher property management income in the quarter. This is not a thesis-changing beat, it is a stabilization print. For Atrium Ljungberg, that may be enough for relief. But the next question is whether Q2 was the beginning of a real improvement, or just a pause in a still difficult property cycle. That answer will come from the call, the leasing pipeline, vacancy trends, and whether completed projects finally start lifting recurring income more visibly. For now, the report says one thing clearly: the situation is not fixed, but it is better than feared.